Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. And in tonight's video, we're going to go over all the trades that we made for Monday, August 31st. Crazy, right? That it's already done with August. Seems like these months, they just start and you feel like you have the entire month ahead of you and then it just flies by. So we're going to be going over these trades. Basically, today, the markets opened up kind of lower. They rallied up a little bit higher. Ended the day pretty decent. I would say an inside day for sure, even though it was definitely outside the normal range that we've been expecting and experiencing the rest of the year. But nevertheless, it wasn't a big move up or down, as I think most people maybe had thought coming in off the weekend, right? That, last week was kind of crazy, and then this week we're going to have some big move down or big move up. But things were pretty quiet. And for that case, we didn't need to do much adjusting, which we'll kind of review all of the portfolio, kind of where we sit neutral-wise on the portfolio tonight on the strategy call with elite members. As far as new positions, we had two quick new trades that we entered today. The first is in APC, which was another strangle around the market. We went out to October in this case, sold the 80 calls above the market and the 55 puts below the market. Took in a credit of almost $2. So again, that credit of $2 moves our break-even point out just a little bit above 80 and down a little bit below our 55 put. So our break-even points are about $2 beyond those. And really nice wide strangle around APC. Now, the reason that we decided to do the strangle is because the stock does have a dividend that's going to be paying out here in the next couple weeks. So had we done a straddle, even though implied volatility is really high, to do a straddle right around where the stock is trading, we would have been at risk on our call side if the stock, had a little bit of a rally enough to pay that 27-cent dividend in a couple days. So for that one reason, we decided to switch up our strategy and do the strangle instead. And again, this is all predicated on just being a little bit forward looking into the future and just kind of, looking forward and saying, okay, we've got dividends or earnings or whatever the case is coming up. How does that adjust the strategy that we're going to go after? Had I not looked at that and we just kind of went off implied volatility percentile, we would have absolutely gone after a more aggressive premium selling strategy like a straddle. But with that dividend, we just don't want to put ourselves in a position where we have to pay the dividend or exit the position early. We don't really give the position kind of the full timeline it needs to actually mature into a nice position. Now, on each side of the market, we entered each position. Thinkorswim's still updating here, so it's not that these have zero or NA. It's just, I don't know, their system continues to be slow with all the activity and updating. But on each side, we did enter each leg at about the 15% probability of being in the money on each side. Now, after we entered that position, the stock rallied just a little bit higher, up to around 71.5. So above the 70 strike, which was kind of our center strike as we started this whole endeavor with APC. But we generally enter the trade very neutral, no directional bias one way or the other. We tried to do things as even and again as neutral as we possibly could. The next trade that we got into was an iron condor in FXE. Now we added another iron butterfly to the portfolio here. And again, the iron butterfly is just an iron condor with our short strikes exactly the same price, the 110 call and the 110 put. So we're short options right where the stock is trading right now. And then we bought options $10 out on either end. So you can see we bought the 112 calls and we bought the 110 puts down below the market. So this gives us basically a $10 wide credit spread on either direction. And we took in a nice premium of about 362. So a very healthy premium. This stacks the iron butterfly right on top of an existing iron butterfly that we already have out in out in October. So now we're starting to build a nice big position in these options for the Euro Trust here. Now, as you can see here on the risk profile, the combination that we now have going with these September and October options gives us a pretty nice payoff diagram. Now, of course, implied volatility is really high in some of the original positions that we entered, so we're kind of in the water on a couple just kind of paper dollars right now. But as implied volatility drops, as the euro markets maybe calm down a little bit or maybe even trend a little bit higher or a little bit lower, we're generally sitting with an overall position September and October pretty neutral on the euro. So things are looking pretty good. I like the position that we have. We could definitely add to this position. We have room in the portfolio to continue to add to this position. And if we did, we would look to add something on this side of the market. So with the stock trading about 110, we'd look to add something maybe around 111, 112. Just give us a little bit more balance if we needed to on the top side, just a little bit more neutrality in the position and kind of really, kind of hone in each individual side. So we've got a lot of premium here on the bearish side. So if the euro markets move down, we're definitely well covered there. Could use a little more premium on the bullish side if we end up legging into another trade. So like I always like to do, I like to get into these positions, a little bit spaced out. So I don't like to throw all of the money or all of the contracts in at one time. I think it's a better way of trading because you can be a little bit more nimble and move with the markets. And so I'm just trying to go through that process with you guys here on the video. Now, as always, I hope you guys enjoyed this video. If you have any comments or questions, please let me know. Add them in the comment box or right below this video. That way everybody can see them. It's a lot easier for me, and everyone else has an opportunity to learn from some of the questions that you might have. Until next time, happy trading.